Hello and welcome to HiWayFX market news for January 15, 2016. On Thursday, we observed a rally in the euro. During the European trading session, the euro-US dollar pair had breached the key mark of 1.090. The maximum of the day was near to the level of 1.0942. However, from the beginning of the American trading session, the euro started to lose its gains. The euro-US dollar pair closed the day a little below the level of 1.087. Today, the main currency pair consolidates to the upside as the bulls build up pace for a decisive break above 1.09 barrier, as persisting risk-off moods continue to underpin the funding currency euro. The resistance levels for the bulls are 1.0905 and 1.0932. At 1:30 p.m. GMT, retail sales in the USA will be released. The experts expect an increase by 0.1% month to month. The strong data may support positions of the American dollar. The support levels for the euro-US dollar are following: 1.0832 and 1.0796. The British pound is continuing to renew its lows for more than 5 years. Yesterday, the mark of 1.4400 was bridged down by the bears. This morning, the GBP-US dollar pair reached a new low, 1.4370. As Bloomberg knows, the key investment banks predict a further plunge for the British pound. Deutsche Bank last year was already predicting a plunge in 2016 to $1.27, a level that hasn't been seen since 1985. ING Bank predicts the pound will slide 8% to $1.32 by the end of June, and Credit Suisse Group AG sees it dropping to $1.40 in 3 months and $1.33 in a year. Nomura Holdings Incorporated is forecasting $1.41 in the middle of 2016, compared with the previous call of $1.52. Strategists are racing to downgrade their forecasts for a currency that's been knocked by a litany of woes, from the prospect of record low interest rates being interchanted for longer than a possible exit from the European Union that business leaders say will damage Britain. Analysts' forecasts for the pound-dollar exchange rate by June have dropped 2% in the past month, even as they failed to keep up with almost 5% slide in that period. The worst after South African rand. The resistance levels for the bulls are 1.4393 and 1.4430. The support levels for the pound are 1.4342 and 1.4307. This morning, the Canadian dollar has fallen to the level of 1.4530. It is the lowest level in 13 years. The US dollar-Canadian dollar was soaring about 1%. Currently, the pair consolidates around the level of 1.4460. The reason of such big movement today was an expectation that the Bank of Canada will cut its policy rate on the meeting of January 20th. Charles St. Arnaud, North America economist at Nomura, notes that oil prices declined significantly in recent months, reaching their lowest level since 2003, and indications that growth stalled in the fourth quarter. We believe that the Bank of Canada will cut its policy rate by 25 basic points, 0.25% at next week's meeting. The resistance levels for the bulls are 1.4510 and 1.4540. The support levels for the Canadian dollar are 1.4349 and 1.4313. On Thursday, we observed a technical correction for gold prices, as the metal safe haven appeal was dampened amid a recovery in global equity markets. The minimum of the day was reached near the level of $1072 per troy ounce. However, on Friday, gold regains the mark of $1080 as risk sentiment soured in Asia after the oil prices fell back in red. Hence, investors pulled out funds from the risky assets, such as equities, and favored the bullion, the traditional safe haven. The resistance levels for gold are $1085.50 and $1090.50. The support levels for gold are the following: $1072.20 and $1070. Stay up to date with all the key financial news around the world by liking us on Facebook, following us on Twitter and Instagram, and subscribing to our YouTube channel. For more information, please visit our website www.HiWayFX.com. Thank you and have a good trading day.